The webinar will begin in 1 minute. Welcome, everyone. We are pleased that you have joined us for today's webinar titled Big Changes to Social Security. The webinar will last approximately 15 minutes, and at the end, you will be given an opportunity to receive supporting materials by email, free of charge to you. You will also be told how you may email questions related to today's content to the presenter. Today's presenter will be Linus Sugis. Linus is the president of Advanced Underwriting Consultants. He and his team answer tax and technical questions posed by producers every day. Linus also spent 14 years working in the home office of a life insurance company in various roles. He also started, ran, and sold an estate planning law practice in the Nashville area. Linus will draw on his legal and life insurance experience during today's webinar, and here he is.
Thank you very much, Amber. I am grateful to those of you who have joined us on the call and those of you who may be listening to the recording afterwards. We're happy to put on the free webinar on the first Wednesday of every month. Next month's topic will be life and annuity unanswered tax questions. If you know of a financial professional, life insurance professional, who might benefit from joining the webinar, please pass the information along. They are welcome to join us. The webinars are open to all who are in the financial professional business. So before we get started on today's topic, which are the big changes to Social Security, let's go ahead and decide on what May's topic might be. The three choices are dealing with Form 1099, Secure Act regulations that require RMDs to come out first, or the third choice is fighting with the IRS. I am going to go ahead and open the poll and give you an opportunity to vote. Go ahead and take about 15 seconds and make your choice for May's topic. Waiting for a couple more responses. Give you a couple seconds. All right, we'll go ahead and close the poll. The topic next month will be Secure Act regulations require RMDs first. Thank you for voting for May's topic. All right, let's go ahead and get started on today's topic, which is big changes to Social Security. We're gonna cover in the next 10 to 15 minutes just a few things. We'll talk about the explanation of the repeal of the windfall elimination provision and the government pension offset. We'll give a couple examples of how things have changed for people who were previously affected by WEP and GPO. We'll talk about what the Social Security Administration has said about what to do in the interim while it figures out how to administer what Congress and the President agreed to. And then finally, we'll give you a little bit of feedback about what you might do with the new information. So let's go ahead and get started with an overview of the repeal of WEP and GPO. So what happened is on January 5th, 2 months ago, then President Biden signed what was termed the Social Security Fairness Act, and it repealed windfall elimination, and government pension offset. Now, WEP and GPO had reduced Social Security benefits for primarily public service government workers who were receiving pension from non-Social Security covered employment. What does that mean? Well, what it means is that these government employees, primarily government employees, had the option while they were working to contribute money into defined benefit plans, and there were no reductions from their salaries for those government jobs for Social Security. So the defined benefit plan was essentially a substitute for Social Security. And the Social Security Administration felt like, the federal government felt like being able to collect both was not particularly fair. And so it created these two special rules, windfall elimination and GPO, to reduce the unfairness associated with collecting both. So what does the legislation provide? It provides that effective backdated to January 1st of 2024, GPO and WEP were repealed, and it's going to effectively increase monthly benefits for $3 million government retirees, including teachers, firefighters, and police officers. So that's the deal. How did windfall elimination work? Well, if you worked in a government job that did not have you participating in Social Security, and then you subsequently worked in the private sector and were able to earn a Social Security benefit, then the windfall elimination provision would reduce your Social Security benefit, the generic Social Security benefit that you might have otherwise been entitled to thanks to your non-government work. That was the overview. The government pension offset, the GPO, made a similar reduction to the spousal or survivor benefits that a government worker might have been entitled to. So let's go through a couple of examples of how that might work. Let's say that we've got Patty McCormick, who worked for 15 years in a human resources job at a for-profit company and then later worked for 20 years in a government job that offered its own pension plan as an alternative to Social Security. So let's say that based on her salary as a human resources person, she would have been entitled to a Social Security benefit of $1,838 a month. And let's say that for her 20 years in that government job that offered a defined benefit plan as an alternative to Social Security, she would have gotten $2,500 a month. So if you use the calculator on the Social Security Administration's website and made some assumptions about Patty's wages and the timing of her claiming, her reduction of the Social Security benefit would have been about $550 a month. And you can see the link to the Social Security Administration's calculator for that. As a result of the new law, where WEP has been repealed, she's going to get that extra $550 a month. There is no reduction for windfall elimination like there used to be. And those increased benefits are retroactive to January 1st of 2024. How does it work with regard to government pension offset? Let's go through a quick example of that. Let's say that we've got Dan Little, who worked for 35 years in a government job, offered its own pension plan and is an alternative to Social Security, and he's never worked anywhere else. But let's say that Dan's wife, Rhonda, worked in a good job for 35 years at a for-profit company, and she's entitled to a $4,000 per month Social Security retirement benefit at her full retirement age. So Dan, if we had no special rule in place, could have filed for spousal benefits, and at full retirement age, he would have collected from Social Security $2,000 a month, except for this special rule that was in place, the government pension offset. Um, if Dan's government pension is $5,100 a month, under the GPO, Dan's spousal benefit would be reduced by 2/3 of his government pension. So the Social Security spousal benefit would have been reduced by 2/3 of his government pension. In this case, using these numbers, 2/3 of Dan's government pension would be $3,400 per month. And since that amount is higher than the potential spousal benefit he would have received, Dan would not have received any spousal benefit at all due to the GPO reduction. But now, as a result of the new law, Dan's going to be able to collect both his government pension and the $2,000 Social Security spousal benefit based on Rhonda's record. And depending on the timing of his filing, that could go back to January 1st of 2024, and the Social Security Administration would need to make up the back pay. Now, if you're working with clients who are affected by these new rules, the clients are going to ask you, what should they do? And there is precious little information on the Social Security Administration's website about how it is they're going to handle this. What they do say is this. They acknowledge that the repeal has happened, and they acknowledge that they're working on it. They're evaluating how to implement it. Because this affects $3 million, 3 million people, and the law's effective date is retroactive, the Social Security Administration has got to figure out how to make up the past benefits as well as future benefits. And the administration is helping people. A lot of people are calling in, but with current budget, Social Security Administration has to deal with the complexity and figure out how to do this. And this is all complicated by the fact that the new presidential administration is doing fairly aggressive worker cutbacks. And so exactly when Social Security Administration is going to have this figured out and is going to be able to help the folks that are enjoying the positives of the repeal of WEP and GPO, we just don't know when they're going to be ready to do that. This is the latest on the Social Security Administration's website. This is what they've said, and this is pretty much all that you can tell your clients about when it is they're going to be able to collect their back benefits as well as the new benefits going forward. So what do you do with this information if you're trying to help your client as much as possible? Well, I think you want to let people know, particularly those people who have been in government work and may have been affected by WEP or GPO, that they should expect a windfall pretty soon. And they could need help with their financial plans when they get that windfall. There may be financial products that they need to invest that money in. A lot of people may have decided not to file for Social Security, retirement, spousal, or survivor benefits in the past because they would have been affected by WEP or GPO. For those folks, they probably need to file for Social Security benefits as soon as possible to maximize their income, not only going forward, but to collect as much as possible from the past. And then finally, the coaching that you should give your clients is that they should be as patient as possible. We've got a reality in Washington, D.C. that the Social Security Administration is perhaps arguably understaffed to deal with this major new change. And so your clients can't really do anything to hurry up the process. When the Social Security Administration is ready with the extra benefits, they'll be ready and the client should expect to receive them. I'd like to thank you again for joining us today, and I'm going to turn the program back over to Amber to close us out. Amber?
Thank you for joining us today. As a reminder, if you would like to receive supporting materials, feel welcome to email us at asktheexpert@advancedunderwriting.com. You may also email questions related to today's webinar. Feel welcome to join us for the next webinar on the first Wednesday of next month, April 2nd, at this same time. Next month's webinar will be titled Life and Annuity Unanswered Tax Questions. You can also find an archive of past webinars on our YouTube channel, Advanced Underwriting Consultants. Please subscribe to our channel. It helps us to keep making free webinar content. Today's presentation will be posted on our YouTube channel by the end of this week. Finally, for more information about the services that Advanced Underwriting Consultants offer, including phone consultation and newsletter licensing, feel welcome to contact us at 615-224-1291. That's 615-224-1291. Thanks again and best wishes for continued success.